Hello students, today let us study about the Insurance Act 1938 and its provisions relating to insurance marketing and intermediaries. Objectives of the lesson are to explain the need of marketing of insurance products and services, explicate the various intermediaries engaged in the marketing of insurance products and services, enlighten the students with the law and regulations governing various insurance intermediaries engaged in the marketing, provide inputs about the appointment, functions and duties of important intermediaries, insurance business and intermediaries. The insurance business is people-centric. It is the business of solicitation. The insurance companies conduct their business operations through intermediaries such as the insurance agents, corporate agents, insurance marketing firms and brokers. They are the link between the insurance company and the prospective policyholders. Section 2, subsection 10b of the Insurance Act 1938 reads with the Section 2f of the Insurance Regulatory and Development Authority Act 1999, that is IRDA, defines the insurance intermediary to include insurance brokers, reinsurance brokers, insurance consultants, corporate agents, third-party administrators, surveyors and loss assessors, and other notified by the IRDA from time to time. The insurance brokers, reinsurance brokers, agents, insurance marketing firms, and corporate agents are concerned with the marketing of insurance products and services, whereas others are concerned with the insurance claim settlements. Section 42D of the Insurance Act 1938 deals with the registration of the insurance intermediaries. It has the umbrella provisions and empowers the IRDA to lay down specific guidelines for appointment and registration of the specific insurance intermediaries. Now let us understand. Insurance agents. Insurance agents are the most significant link between the insurance company and policyholders. The insurance agents are not the employees of the insurance company. They receive the remuneration in the shape of commission for the services they offer. Section 2, subsection 10 of the Insurance Act 1938 defines the insurance agent to include who receives or agrees to receive payment by way of commission or other remuneration in consideration of is soliciting or procuring insurance business, including the business relating to the continuance, revival or renewal of policies insured. The AP High Court has upheld the aforesaid concept in Hindustan Ideal Insurance Company Limited versus J. Lakshmamma, AR 1959, AP 562. Section 42 of the Insurance Act 1938 and the Insurance Regulatory and Development Authority Licensing of Insurance Agents Regulations 2000 and amendments made thereafter have laid down the eligibility norms and procedure for appointment of the insurance agents. Licensing of insurance agents. Section 42 of the Insurance Act 1938, amended in 2014, empowers the insurance company to appoint any person to act as insurance agent for the purpose of soliciting and procuring the insurance business. The person so appointed will act as an agent for only one insurer, either to life insurer or health insurer or general insurer, and there should not be any conflict of interests for the insurance agent or the insurance company in undertaking such insurance business. The person should have requisite qualifications and training. He will not have disqualifications as stated in Section 42(3) of the Insurance Act 1938. The license issued under these provisions is valid for a period of 3 years and requires renewal before it expires. The insurer is responsible for the acts and omissions, violations of code of conduct of agents, and are liable for the penalty, which may extend to rupees 1 crore. Qualifications of agent. The applicant should possess a minimum qualification of 12th standard or equivalent examination. In the areas where the population is below 5,000, the applicant may have the qualification of 10th standard or equivalent. The applicant should have a practical training of 100 hours in life or general insurance from an approved institution. And if the applicant is of higher qualification, the period of practical training requirement is reduced to 50 hours. Disqualifications. The person should not be a minor or unsound mind or insolvent or otherwise disqualified by any law prevailing for the time being. The person should not have been guilty of criminal misappropriation or criminal breach of trust or cheating or forgery or an abetment of attempt to commit such act of offence. The person should not have been found guilty of any fraud, dishonesty or misrepresentation against an insurer or insured. He should not have violated the code of conduct as specified by the IRDA. Any person who is appointed as an agent in contravention of the above provisions of the Act and regulations and undertaking the business is punishable with a penalty of rupees 10 lakhs. Code of Conduct of Insurance Agents. The Insurance Act 1938 and the regulations of the IRDA formulated a code of conduct which is to be adhered by the licensed agents. The agent should disclose the identity of the insurer on whose behalf he acts. He should disclose the licenses, scale of commission paid to him, premium charged by the insurer, the information regarding the insurance product whenever demanded by the policyholders. He should collect prospectus, material information required to sell and purchase the insurance product. He should bring adverse habits and qualities of insured and risks as known to him and which is in his knowledge to the notice of the insurer. He should inform the position of the proposal, whether accepted or rejected, and reasons thereof. He should obtain required information and documents at the time of filling of the proposal forms and assist the policyholders or claimants or the beneficiaries in complying with the requirements for settlement of the claims by the insurer. He should advise the policyholders to effect nomination for the policy that they purchase. The agent should not induce the prospective policyholder to omit any material information required in the proposal form or to give misrepresentation or disclosures. He should not interfere in the business of other agents or other insurer. He should not offer different rates, rebates, terms and advantages other than those prescribed by the insurer in order to get a new business. He should not apply for agency before the completion of prohibited period of 5 years on account of cancellation of the license earlier. And he should not be director of any insurance company. Duties of insurance agent. The insurance agent is required to sell insurance policies to the public and get business to the principal and achieve the targets fixed by the principal. To provide after-sale services to the insured and prospective customers. He should also help the customer during the settlement of claims and payment of premiums. To provide the latest information of the insurance rules and claims to the policyholder and help in renewal of policies and payment of premiums. To disclose the facts that have come to his notice in relation to the risk or the policy or the policyholder. To pay the premium collected from the policyholder to the insurer. In addition to the above functions, he is having other obligation to the policyholder and insurer to maintain cordial and continuing business relationships. Rights of agent. The agent has a right to claim the remuneration for the business procured, compensation from the principal for the damages or loss suffered during the conducting of the business or due to the negligence of the act of principal. Sue the insurance company for non-payment of commission for business procured by him. get indemnified by the principal for the suits instituted by customers or policyholders. Presumptions. It is presumed that the knowledge of facts to the agent is the knowledge to the principal. The agent is working within the powers granted to him. The statement made by the agent acts as estoppel to the principal. An agent acting in excess to the authorities given to him does not bind the principal. Termination of the agency. The license of agent may be cancelled when the acts of the agents and the insurance company is detrimental to the insurance business, the agent is convicted or charged for the acts of criminal nature such as fraud or misrepresentation, the business targets and minimum insurance business are not completed, the agent becomes incapable of undertaking the business due to physical or psychological reasons. Non-renewal of license by the agent. Remuneration to agents. The insurance agents are not the employees of the insurance company. They are eligible to receive the commission on the insurance business they procure, including the renewal premium. The commission is paid on monthly basis, during which the premium is collected. The maximum commission payable on the first year premium of life insurance business is 40% and 5% on the subsequent premiums collected. In general insurance business, the maximum commission payable is 15% of the premium collected every year. The commission is also payable on the annuity policies, and the commission payment is regulated by the IRDA regulations. Licensing of corporate agents. The IRDA has issued regulations pertaining to licensing of corporate agents in 2002 and later revised regulations. The IRDA registration of corporate agents regulations 2015 were issued during 2015. The insurance company may avail the services of the registered corporate agents for the purpose of soliciting, procuring and servicing of insurance, business of life insurance, general insurance and health insurance during the validity period of license issued to them. Application for registration of corporate agents. A company, limited liability partnership firm, cooperative society, banking company, non-governmental organization, regional rural bank and an individual considered as a fit and proper may apply for registration as a corporate agent. The tenure of the certificate of registration is 3 years and application for the renewal has to be made before 30 days of expiry of the registration in application form A along with the requisite fees. A duplicate certification may be issued in the event of loss, damage or destroy or the mutilation of original certificate on payment of ₹1,000. Procedure for registration of license. The applicant interested to act as a corporate agent should apply to the designated authority of the insurer. He can apply for single license or composite license. The single license may be filed either for corporate agent life or corporate agent general insurance or corporate agent health. In case the applications for the composite license for life, general and health, he should submit 2 different applications. In case of single class license, the applicant is permitted to have arrangement with 3 different insurers dealing in the similar class of business. The corporate body should apply in a different format for registration along with the fee. The applicant should have a minimum capital and net worth of ₹50 lakhs in equity shares and maintain the net worth of ₹50 lakhs at every point of time. The insurer, after receiving the application and duly verifying the facts and on satisfaction, issues certificate of license which permits the agent to commence his business. Section 42. The validity of license is for 3 years from the date of issue and can be renewed. The corporate agent during the continuance of license shall maintain the records of books, and accounts, other information as required under the law, ensure code of conduct, maintain well-designed grievance settlement mechanism to solve the complaints within the 14 days of receipt of the complaint. The corporation shall take a professional indemnity insurance policy if the revenue from the insurance business solicited is more than 50% of the entire revenue received. The corporate agent shall enter into arrangements with the insurers and some of the organizations within the 30 days of grant of registration. No incentives or other incomes are payable to the corporate agents other than agreed as per the directions of the IRDA. The corporate agent may utilize the services of the telemarketing as per the guidelines of the IRDA. They shall provide services to all insurance policyholders during the continuance of insurance contract. Insurance brokers. The IRDA Insurance Brokers Regulations 2002 issued by the IRDA were withdrawn, and a new IRDA Insurance Brokers Regulation 2013 were issued, and these regulations supersede the old regulations. The insurance broker is a person for the time being licensed by the authority under the Regulation 15 of the IRDA Insurance Brokers Regulation 2013, who for remuneration arranges insurance contracts with the insurance companies and or reinsurance companies on behalf of its clients. The insurance brokers may be classified into direct broker, life, direct broker, general, direct broker, life and general, reinsurance broker, composite broker. The direct broker is an insurance broker who for the time being licensed by the authority to act as such for a remuneration carries out the functions as specified under Regulation 4 of the IRDA regulations, either in the field of life insurance or general insurance or both on behalf of his clients. The composite broker is an insurance broker who for the time being licensed by the authority to act as such for remuneration arranges insurance for his clients with insurance companies and or reinsurance companies for his clients. And a reinsurance broker is an insurance broker who for remuneration arranges reinsurance for direct insurers with insurance and reinsurance companies. The principal officer of insurance brokers entity should be a graduate in science or computers or MBA or associate or fellow of Institute of Insurance located any place in India, or chartered accountant or CFA from any recognized university. He should have undergone insurance training for a minimum period of 50 hours in theory and practical from a recognized insurance institute. Registration of insurance brokers. An application for grant of license to undertake the insurance business as insurance broker has to be made in Form A of Schedule 9. The minimum capital required for the insurance broker is Rs 50 lakhs. For the reinsurance broker is Rs 2 crores and for the composite broker is Rs 2.5 crores. The capital must be in the shape of equity shares for companies and society, whereas for individual members and LLP should be in cash. In case of company with foreign equity, it should not be more than 26% of the capital. The broker should maintain the minimum net worth of 100% of the paid capital at every point of time. Every insurance broker before commencement of the business shall deposit 20% of the capital in fixed deposit having the lien of the IRDA, and the same cannot be used by the insurance broker for any purpose. The deposit is in addition to the capital and preliminary expenditure incurred by the broker. The authority, if satisfied with the information and documents submitted by the broker along with the application, issues a license in the Form B. If not satisfied, may seek further information. If the application is not in order, it may reject the same by giving the reasons. The applicant may make fresh application only after 1 year from the date of final rejection. Every insurance broker should have a professional indemnity insurance policy against the liabilities. The license granted for insurance broker is for a period of 3 years, and every broker required to renew the same by filing application form A along with a non-refundable fee of ₹1,000 at least 30 days before the expiry of the license by paying ₹100. In case the license is expired, the renewal application may be paid within 60 days along with fee of ₹750. A fresh application has to be filed in case of renewal application is not filed after 1 year of the expiry of the application. A duplicate license may be granted in case the original is lost or destroyed on payment of ₹1,000 only. The insurance broker is permitted to sell the insurance business online and also by using the telemarketing mode. The insurance broker may not solicit or undertake the insurance business more than 50% of his total business from a single client. Every insurance broker is under an obligation to maintain the books of accounts as required under the Insurance Act 1938, prepare financial statements, controlling statement, and should submit the same to the authorities as per the requirements under the regulations. The brokers can undertake the claims consultancy to a maximum claim up to ₹1 crore. The authority may cancel, suspend, or impose financial penalties for violation of the code of conduct of the brokers and other requirements under the regulations. The insurance broker is under obligation to provide all the information and changes that take place in the capital structure, organization structure, and insurance business undertaken by it. The insurance brokers are paid the brokerage and no other remuneration or fee or consultancy charges as per the provisions of the regulations and notifications issued by the IRDA from time to time. Functions of the brokers. The insurance broker shall collect the detailed information of the client's business, underwriting information, and the risk management philosophy. They help the insurer in assessing the risk, pricing terms, and the conditions of cover. He assists and provides services to the client such as collection of the premium, settlement of the claims, maintenance of records of claims. The reinsurance broker will familiarize himself with the client's business, management policy, reinsurance business policy, maintain a database of available insurance markets, including solvency ratings of individual reinsurer. The reinsurance brokers help in finalizing the claim, collects and arranges the payment of premium as per the instructions of the client. He maintains the records and books of the accounts relating to his business and clients whenever necessary. Code of conduct of insurance brokers. Every insurance broker shall maintain high standards of professional ethics in the matters relating to clients' relations, matters relating to sale practices, insurance contracts, the insurance policies, proposals, renewals, surrender of policies, claim payments and settlements, setting of claim grievances in relation to advertisements, payment of remuneration. The reinsurance broker and composite insurance broker shall follow the code of conduct more cautiously towards all stakeholders, online insurance business, foreign remittances, and reinsurance treaties. Insurance marketing firms. The IRDA Registration of Insurance Marketing Firms Regulation 2015 empowers the insurance companies to have arrangements with the insurance marketing firms for soliciting and procuring the insurance business. The insurance marketing firm is an entity registered with the authority to solicit or procure insurance products as specified in Regulation 3A, to undertake the insurance activities as specified in Regulation 3B of the regulations, and other financial products specified in Regulation 3C by employing any individuals licensed to market, distribute, provide service such as other financial products. The firm is empowered to solicit and procure the two insurance products of two life insurance, two general insurers, and two health insurers by employing the individual salespersons having the valid license to market the insurance products. The insurance service activities which are permitted to be undertaken are back office services, insurance repository, survey and loss assessment, and these activities should be related to the insurers having the arrangements only with the firm. Marketing of financial product include mutual funds, pension funds, government securities, and other products approved permitted by the SEBI and IRDA. Registration of the insurance marketing firm and the individuals employed by the firm is essential. If any firm undertake the business without having the registration is liable for penalty as notified by the authority from time to time. An incorporated company, limited liability partnership, cooperative society, and any other person considered as fit and proper and not disqualified may make application form A along with the required information, requisite non-refundable fee of rupees 5,000 and taxes thereon, and exam pass certificate of the principal officer of the firm, and also the insurance salespersons proposed to be engaged to authority. The insurance marketing firm should have a minimum capital and net worth of rupees 10 lakhs at any point of time during the validity of the registration. If the application is found to be complete, the authority is satisfied, it may issue the certificate of registration. Once the application is rejected, the applicant may apply after 1 year as a fresh application. The validity of the registration is 3 years and it may be renewed. The authority may issue a duplicate certificate on mutilation, spoiling or damage of the original certificate by specifying to that effect. The regulations provide for the payment of remuneration and other operational aspects of the insurance marketing firm. The firm shall have a professional indemnity policy to protect the interests of employees. The insurance salesperson shall strictly adhere to the code of conduct specified by the authority from time to time. This lesson gives us a holistic picture of insurance marketing and the authorities or intermediaries relating to the marketing activities of the insurance business. Let us study and understand different things of insurance in the next class. Thank you.